Hello, everyone, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we have quite a number of things that have already happened in the markets. One of the key highlights is the Bank of Japan surprisingly hiking interest rates by 20 basis points. And this basically moved interest rates from negative 0.1% to positive 0.1%. It was a big surprise. It was the first rate hike in 17 years. And of course, the Japanese economy has survived for 8 years within negative interest rates territory. So now we are welcoming the new change in policy direction, basically seeing positive interest rates in Japan for the first time. So we'll be talking about this among other big things happening in the markets today. And once we cover these, we also be looking at technical analysis to understand where the charts are headed, with a key focus on the major currency pairs, major commodities, gold and oil, and of course, we'll be looking at stock market indices. So once you join in, kindly say hi in the live comment section. And if you have any questions related to the presentation, feel free to type them in the live comment section, and I'll be responding to these towards the end of the session. So as usual, I will begin with a disclaimer that this is not investment advice. It is not a recommendation to trade, so you should always do your own due diligence. So that being said, I think it's reasonable to start. So hello, Jack. Hello, Latina Morgan. Hello, Tony Dollars. And thank you for joining the session. Let's get things started. So we'll start with a quick overview of what happened in the markets. And once we go through that, then understand where we are headed. So just a moment, I'm trying to share my screen here. So this is the economic calendar, and I'm hoping everyone can see it. Trying to find the most appropriate view that will give you maximum screen. So Monday was a pretty quiet day. We didn't have much happening besides the industrial production year over year in China, which came in at 7%, up from 6.8% in the previous reading, indicating that industrial production in China is currently improving. So we also had the CPI data from the Eurozone, where the final core CPI, or annual inflation without food and energy, came in at 3.1% as expected. Of course, final overhead CPI came in at 2.6%, same as expected, and we didn't have much reaction from that. So the biggest news on Monday, as we discussed on the market snapshot, was the big major movement in oil prices as a result of the strikes that Ukraine had impacted on Russian oil infrastructure. And at the same time, an increase in industrial production in China led to the belief that there is a higher demand for oil, and as a result, we continued seeing strong oil prices. So on top of that, we had Iran oil exports to the US, basically reducing significantly, indicating a much tighter supply, and as a result, the three factors combined pushed oil prices higher. So early this morning, we had two central banks making interest rate decisions. The first one happened at 6:30 a.m., where the Reserve Bank of Australia decided to hold interest rates steady at 4.35%. So this was an unexpected outcome. So everyone was expecting to see the Reserve Bank of Australia holding interest rates at that level. So we didn't have much movement as a result of that. But the movement in the markets was caused by the Reserve Bank of Australia rate statement, as well as a monetary policy statement, and of course, the RBA press conference. So the big news is that the Reserve Bank of Australia has been hiking interest rates in order to fight inflation, and inflation has not been responding kindly. It has not been moving as projected. So what we have been seeing is basically inflation remaining significantly high. So I'll try and look for Australia inflation real quick. So as per the last quarter, that is the fourth quarter of 2023, inflation came in at 4.1% in Australia. So this was a big improvement from a previous reading in quarter three of 5.4%. So remember, inflation data in Australia comes in quarterly compared to other countries where it comes monthly. So with inflation at 4.1%, it's still way above the central bank's target. And this means that there's a high likelihood that the Central Bank of Australia will continue holding interest rates higher for longer. So in that case, if they continue holding interest rates higher for longer, the problem is that the interest rates are not as high as other economies. So if you look at the US, the interest rate is at 5.5%, and for Australia, it's 4.35%. So that big difference basically creates a monetary flow where we see a lot of money being invested long the dollar and short the Australian dollar due to the difference in interest rates. So as a result of this, seeing that the Reserve Bank of Australia is holding rates at 4.35%, and the US is holding at 5.5%, and it might continue holding on the next meeting tomorrow. Remember, tomorrow we have an FOMC interest rate decision where the Fed is expected to hold rates at 5.5. So as a result of this discrepancy or divergence in monetary policy between the two economies, what we saw is the Australian dollar continuing to weaken against the US dollar. So we'll be covering that when we are doing the technical analysis. And the next part is on the big news in the markets for the day, which is the Bank of Japan deciding to suddenly hike interest rates. So as you can see, the previous reading was negative 0.1, and we expected the forecast to be the same, negative 0.1. But then the big surprise rate hike to 0.1% caused massive volatility in JPY pairs. But then this was not in the expected direction. So a lot of investors who have been betting on this, they were expecting to see the yen strengthening too much as a result of a change in monetary policy, in this case, starting to hike interest rates. So main reason we didn't see such a reaction is because the announcement was already expected. So investors have been adjusting to this possibility for some good time now. So second thing, after the Bank of Japan decided to hike interest rates, there were two major things that it did. So the first one is the yield curve control program, which was limiting the 10-year government bonds at around 1%, was completely removed. And by removing this, it means that the Bank of Japan will not be capping the yield on 10-year bonds. So this was massive and is expected to be positive for the Japanese yen. But then the key point that was contradicting the two monetary policy tools was the current quantitative easing program. So the Bank of Japan has been buying bonds as well as other corporate bonds and assets within the market. And this has been a tool for what we call monetary policy easing. So as a result, this has contributed to a very good performance of the Japanese economy. And by performance, I'm not saying economic growth. Japan has been struggling with growth. So what we've been seeing is the Bank of Japan winning the fight against deflation. So for the past 2 decades, the Bank of Japan has been fighting deflation. That has been a major problem. But then over the last 1 year, we have seen Japanese interest rates remaining high for the foreseeable period. So for 1 year, they remained high, and we could continue seeing high inflation in Japan. So in order to maintain this positive inflation, the Bank of Japan has been focusing its energy on the labor market. It wanted to see continuing wage growth before it decided to hike interest rates. So the final nail on the coffin before they made this decision was Japanese labor unions pushing companies and industries to adjust salaries higher. So we saw companies like Toyota basically increasing salaries for their employees. And the moment these companies went for 5, 6, some of them up to 8% increase in salaries, then the Bank of Japan was satisfied that the inflation is now getting sticky and it's time to begin tightening policy, or basically removing the ultra easy monetary policy that was pre-existing before. So in this case, we are looking at a Bank of Japan that is now looking to tighten policy. So potentially we could be seeing another rate hike later in the year. So the yield curve control program now allows bond yields to rise higher. And if they rise higher, then it basically means that the Bank of Japan bonds become more attractive, and they basically help remove excess liquidity from the markets. So as a result, long term, we expect to see the Japanese yen now starting to strengthen against other currencies. But also remember, there's still that key divergence between the Bank of Japan and other central banks. So while we are looking forward to the US Federal Reserve cutting interest rates, it hasn't cut yet. So the interest rates are still at 5.5%, and the bond yields are still significantly high, with the 10-year bond yield being above 4%. So it is not reasonable to go for a Japanese yen bond that is paying you 1% compared to a US bond that is paying you over 4%. So as a result of these monetary policy divergence, what we have been seeing is basically the yen continuing to lose against the US dollar. So that has been the story of the last 2 years, and this is the third year, and nothing seems to have changed much because the interest rates are still significantly high in the US, and this attracts more money to US treasuries. So that being the case, and now looking at the economic calendar, we know that the last data point for the day was Canadian inflation data. So I'll be looking for that. Just go to calendar on trading economics. And this was the most recent data, which came 43 minutes ago. So from Canadian inflation, we saw the inflation rate year over year come in at 2.8%, despite the market having an expectation of 3.1%. So inflation reduced from 2.9% down to 2.8%. And of course, for core inflation year over year, it was 2.4%, and it dropped to 2.1%, lower than the expectation of 2.3%. So what this means is basically that inflation in Canada is moving reasonably towards target. So for core inflation, you can already see it's very close to the 2% target. For the annual overhead inflation, it's still quite a distance, but way closer. Remember, for the US, it moved to 3.2%, meaning that Canada is closer to getting to its inflation target than the US. So as a result, we will check how the markets have reacted and then try to understand the way forward. So that was the last major news for the day. Building permits in the US came in at 1.518 million, and this was higher than the previous 1.489 and also higher than the consensus estimate of 1.495. So this means that the building permits in the US are increasing, and this is an indicator of oncoming construction, which means that we could be seeing construction rising in the near term, and as a result, we could be seeing the US property market starting to heat up yet again. So that being said, now I'll try to switch on and move to the MT5. Then from the MT5, we'll try to understand where the markets might be headed next. So just a second. So I'm hoping that everyone can see this. So hello, Francis. I can see Lucy in the house, football highlights, sunset, as well as Tony Dark. Thank you guys for joining. So from the MT5, the key highlight for the day is USD JPY making a big move upwards. And this is something we had already discussed on Monday. So we mentioned that the markets was basically moving sideways. So we didn't have much of a movement here. Then today, you can see the big jump in the rally, and now we are approaching our target, which is the previous high of 150.866. So after the big sell-off 2 weeks ago, last week was recovery, and today we are completing the journey of recovering all this downside momentum as the dollar regains strength in the market. So from the 1 hour chart, there's still more room for upside. Could still get to 150.866, which was the previous high, and potentially break that and go for the multi-decade high of 151.878. So this is the highest we have seen in a couple of years. So this is what we saw in 2022, 2023, and now 2024. The market is trying to break that area and potentially even move higher. So for the dollar index, we saw a big spike last week. Then the market moved sideways on Friday, sideways on Monday, and now today being Tuesday, we have seen the continuation of the break. Remember, the break happened on Monday in the evening, and a continuation has been seen for the better part of the day, basically showing the strength of the dollar as the dollar recovers against the losses we saw 2 weeks ago. So with this in mind, we have also seen the Australian dollar making some big momentum downwards against the US dollar. So for AUD/USD on the daily chart, you can see it's basically reversing a move that we recently saw. So 2 weeks ago, this is when we had the biggest momentum in the market, with the Australian dollar making quite a big gain against the US dollar. So last week, we started reversing this move, and this week, especially after the news, we can see the market continuing to push lower. And the low of 2 weeks ago and the third week in the past seems to be holding on strongly at this level of 0.64861. So there's still more room for downside, and we could potentially see the Australian dollar continue dropping to this level of 0.64861. So those have been the major movers in the market today. Not forgetting the US dollar against the Canadian dollar. We just had some data released earlier. And what we are seeing is the weakening of the Canadian dollar as the US dollar continues to show its strength across board. So the first target of the previous high has already been hit. So if there's an extension of this momentum, then we follow this particular trend line, which has been holding true for the better part of this year. So since the beginning of the year, the USD CAD pair has been trading between these two trend lines. Now we are on an upswing. We just saw a big spike high here during the news, and an expectation of an extension is more reasonable. So we could be seeing this rally extending all the way up and at least getting to 1.36431 based on the strength of the dollar and the weakness of the Canadian dollar. So this seems more reasonable. And if you go to the 4-hour chart, this is how it looks like. So it's more about completing this journey to 1.36431. So weaker inflation means that the Bank of Canada is closer to achieving its targets. And if it's closer, then it means that the likelihood of the Bank of Canada starting to cut interest rates seems significantly high. And in that case, the Canadian dollar starts weakening against other currencies, especially the US dollar, which has a much higher interest rate. So remember, the interest rates for Canada is currently at 5%, whereas for US is 5.50%. That is the upper limit, which means that there is already a carry trade between the two economies. And now when we add the new inflation data indicating that Canada is closer to achieving its inflation target, then this momentum becomes more realistic. So as for gold, this is one of those instances when I tell you guys, patience, patience, patience. So what we have been seeing was a big momentum upwards. So if you go to the 4-hour chart, remember the week I told you when we had the highest momentum, this was the week when gold basically hit a new all-time high. Then for the entirety of last week, it's just gold moving down and then up and then down, up, down, and this looks like a flag. So the big momentum up was the flagpole. This is the flag. We are still trading within the flag, and what we are seeing is these cycles happening over and over again. And if you are to look at this, you notice that today we had what looked like a half cycle downwards, and now we might be going for another half cycle upwards with a limit on the upper trend line. It doesn't make more sense to trade within the flag, so it makes more sense to trade the breakout. So if you could capture such a move, such as 2 weeks ago when gold was on a strong bullish momentum, then the potential for making some pips for yourself makes more sense compared to trying to find some opportunity in here. So in this case, I'll be more patient, waiting for the eventual breakout. And there is a high likelihood that the breakout will happen during the FOMC interest rate decision, and that is expected to be happening later this week. That will be on Wednesday during the FOMC press conference. So the FOMC press conference will be happening. This is tomorrow, and if I check from my economic calendar, this should be at 9 p.m. So tomorrow at 9 p.m., this is when we'll be having one of the biggest news announcements in the market. And I'm hoping that everyone will be able to benefit from this. So just be patient, wait for the breakout. If it's higher, we go higher. If it's lower, then we go lower and get to benefit from the impulse movement that comes out of that. So for the US equity indices, we've been seeing signs of weakness. So on Monday, we discussed that there was a potential bull market momentum following that the market had hit a value area here. And it played out quite well after the market bounced from this area. For the better part of the day, the Nasdaq kept going up. And once it got here, changed direction, moved downwards, and today has been moving down. And now we are seeing a bounce in the last 1 hour. So it seems like a market that is more relaxed. It's not moving much. And if you were to use a trend line, I would say this is the trend line we are seeing on the 1 hour chart, basically indicating that the market is forming lower highs. So on the low side, I would say there's more of a sideways momentum here. So this area seems to be a major support for this particular index. So if you zoom in and you look at the number of instances, the market has found support along this area, then it becomes more reasonable or more believable. So this is 2 times already. The market attempted to break there. Then on the third time, it was close to the lower trend line but did not get there. So this is another instance. And now from this, you can see that the market is naturally just moving sideways. So overall, for this particular period, we can say this has been the price action or the direction of price. So price has not been moving up or down. It's just more of a sideways momentum without slight pressure towards the downside. So the major moves are expected to be happening from tomorrow at 9 p.m. When we get the FOMC press conference, and if Jerome Powell decides that rates are staying higher for longer, then the idea in that case becomes the dollar being pretty strong, and we could be seeing stocks weakening. However, if there's a potential and we see the Fed Chair Jerome Powell focusing on early rate cuts, then in that case, we could be seeing the Nasdaq going for an all-time high. So for me personally, I would be more interested with this support area here and potentially looking for a position that would take us back to an all-time high. And the all-time high would be somewhere along this area. So 18,421 would be a nice target. And this is based on the outcome of the news tomorrow. And it seems to be the same case for other pairs. So if you go to the Dow Jones and you look at the last 3 days price action, this basically screams of a market that is consolidating. And now this one seems like a clear triangle. So if you look at the big swings and try to understand what has been happening, then it's more like this. A market that is forming a high, then a lower high, and an even much lower high. And then if you look at the lows from this low to the low of the following day and the low of today, they are all rising. And this gives the vibes of a market that is just moving sideways this way. So eventually we'll have a breakout, and I suspect that will be tomorrow. But if it happens early, then that's also welcome. And we should be looking to trade in the direction of the break. So if you look at the US 500 or the S&P 500, then this has been the prevailing trend line acting as support. So after the rally that we saw yesterday and the market changing direction, then you can see that the sequence of highs from this high to the next and then to the next, what we are having here is a market that is forming lower highs. So from this to this to this, they are getting lower. The lows are still getting higher. So it's more of a consolidation. So we can say that from this big move here, since then, the overall market direction is sideways. So we don't have much of a direction in these equity indices up until tomorrow, hopefully. So Brentwell seems to be the most and easiest, simplest trade in the market right now. So after we saw the market moving almost sideways for a while, so this was the period when Brentwell was just moving here with a maximum of around $84 and a minimum of, I would try to trace this bottom here, around $80.37. So we can say for this period, Brentwell prices were just moving sideways. So to this sideways momentum, we had a break, a retest, and a continuation. And from that moment onwards, all we are seeing is a strong impulse movement. So if you go to the daily chart, there's still more room. Times when the Russia-Ukraine war had started, when price. So Joe Biden, the US president, decided to tap the US strategic oil reserve, manipulate here towards the end of last year. Then earlier this year, we also saw another bottom around 76. And of course, the lowest price we saw was right here. And this was in December at 72.523. So since then, month over month, we've been seeing oil prices being quite volatile. But then a rally has finally broken out, and it seems unstoppable. So there's a good momentum, especially considering yesterday. So today, for the better part of the day, we have seen this momentum happening, oil prices attempting to move back downwards and failing. And now as we enter the New York session, we are seeing a burst of momentum higher. So there is a good chance that we will be breaking yesterday's high and going for yet another high. So there is a good chance that we will be seeing much higher prices for the day, and that could be a nice trade setup. So the next target, if you ask me, would be based on the previous highs. So we have seen several previous highs, especially this current area here and these current areas here. So if you monitor here, you notice it's an area of conference. And in this case, it works nicely as a next target. So this is $87.755 per barrel. So still more room for upside. And this is quite a significant move. So try and draw an arrow here. So now the target has moved to 87.755. For the Euro 50, we saw a breakout here. It did not hold for long. So this one went really badly. So after the market failed to break that, now we have to adjust our trend line and now base it on these most recent close and now work with what we have. Remember, we always trade what we see. And now we are on a swing. Not much of a momentum. The bench 40 cash index also showing the same. So now we have to adjust to what we are seeing and now eliminate the previous bias or analysis that was showing a potential move downwards on this upper trend line. So for the looking for one more European or UK 100 index, what we have been seeing is the market consistently move. So overall, we can say this has been the direction here. Say the direction has been following this path. I'm just trying to connect these lows. So it's more like a flag, but with a lot of noise in it. So movement down and then up, down, up, down. And now we're just on an upswing. So there's still nothing much is happening to cause a massive break. So as for the dollar trading against the Swiss franc, we managed to hit a major resistance level. So from the forward chart, this is how it looks like. So it's a time where we found a resistance here. A second time we found a resistance here. And now at that time we found a resistance. But then if you look closely and observe the candlesticks on the 4-hour chart, you notice the price action here. So I want us to focus on the highlighted area. So market was moving up. The black line is the resistance that has been tested twice before. So green candlestick approaching the resistance, then a very small candlestick with small tails indicating a reduction in volume, then a candlestick with a wide range. And the range is basically the difference between the high and the low. So this is a wide range candlestick with a significant push downwards. Then on the next, the market crosses and the open, and now we are yet in another candlestick. So if this one closes lower, then that will be an indication that that level has completely been. So this is how it looks like on the 15-minute chart. So notice the attempts to break that are failing each time. But then judging from what we are seeing in the market, this franc is not there for as long as the resistance line and closes higher, then in that case, we could be considering going for an extension of the bullish momentum, and that could be based on the size of the range. So the size of the range from bottom to top would move as far up as 0.90320. So that's it for the day. I don't know if there's anything I missed. So I'll be checking on your questions to see. So hello, Praise Victor. Hello, Patrick Ongari. Hello, Apollo. A good question from Apollo. Has the Bitcoin bottomed? That's a good question. So it's a problem with my internet today. I don't know why that is. So I'll be checking on that to make sure it doesn't happen again. So the question on Bitcoin, it seems like we've had quite an adjusted or extended bearish momentum. So from the 1-hour chart, this is how it looks like. So we had identified a potential trend here. So market broke to the lower side, and this is majorly as a result of the Grayscale Bitcoin sales. So Grayscale has been selling a record number of Bitcoins in the market, leading to a slump in prices. So seeing this happening, it's basically leading to more panic selling, and as a result, some further downside momentum. And today we are at 63,472. So I don't think we have bottomed yet. So there seems to be quite a strong momentum downwards. And looking at the candlesticks, there is no indication or a print of a strong bullish entry. So in this case, if we had something like this, let's say this green candlestick happening into the selling, maybe a selling, then a strong green candlestick, then that would be an indication of the market reversing. But for now, the candlesticks are not as positive, so I'm not very sure that the market has bottomed. So on the other hand, we know that Michael Saylor has issued another bond, or basically taken another loan of about $600 million. And he will be looking to fill those orders with the current Bitcoin prices, which are much cheaper. So remember, the last time he bought was above $70,000 per Bitcoin. And now that he's seeing 63,500, there's a good chance he'll be absorbing some of that supply from Grayscale. And as a result, we could be seeing the price pumping. So the market has just opened, and it's just 5 minutes in, and we're already seeing some form of signs that the market is beginning to recover. So there is a good chance we could be seeing some recovery starting to happen in the market from now. So another good question, would you advise me to quit my 9 to 5 job for Forex trading full-time as an analyst? No, I wouldn't advise that. If you wanna work full-time as an analyst and trade Forex full-time, the best thing to do first is to focus on your skill. And once you're confident with your skill, then it will be an easier decision to make. So I don't know about your skill, so it's only you who can make the judgment, and it's only you who can make the decision. But before you quit that job, make sure that your skill level is high, because it is a really highly competitive environment. Should we expect the normal correlation between Canadian dollar and oil prices to resume? Because at the moment, they are moving in two different directions. So monetary policy tends to supersede oil. So when you're trading the Canadian dollar, know that the monetary policy is much more impactful than the oil prices. But then once the impact of the news is off, then the correlation should be back. So in this case, if oil prices continue being strong, then they could start supporting the Canadian dollar again. And of course, you don't have to trade the USD card. There's other Canadian dollar pairs you can trade. And the idea is that to trade a strong card against a weaker currency. So in this case, something like CAD JPY could make a much quicker recovery compared to USD card, mainly because the dollar is currently very strong, but the yen is not that strong. Question from Asha. BTC traded up to 10K on an exchange yesterday. Yes, these liquidity issues happen with brokers. So exchanges will sometimes happen to have these disruptions in their price level based on where they are getting their supply. And of course, based on tech can sometimes malfunction. So it's not something that is insanely crazy. It has also happened even to Forex brokers before, especially if you've been trading, sometimes it will happen. But trust that brokers will always be trying everything to make sure it doesn't happen. A good question. This has been show us your trading history. This is a demo account. It's a demo account mainly for a very good reason, that we are not supposed to offer investment advice or a recommendation to trade. So this is purely educational. And as per my trading history, this is something very personal for me. I don't share that. So I'm just checking to see if there's any question I've missed. So if you're still here, kindly share this live session to other traders. You can share on your social media, and I would really appreciate that. And of course, if you have a community, share with them so that they can also benefit from the session. And remember to like the live video. A good question here, what's a fake out and how long does it last? Here, try and explain how we can try and avoid them. So I would say a fake out is a breakout trader's worst scenario. It's not something you want to experience. And I think I've just explained two fake outs happening in what I would call European equity indices. So for European equity indices, not the French 40, don't know where I found this. I think it was on the euro. So earlier on, when you were drawing this trend line, it wasn't looking this smooth. So it wasn't parallel with the upper trend line. So we were trying to understand the bottoms here. So we tried to use the body here and connect with this, and then we found this to be the appropriate support area. So with this marking the support here and then the support here, then if you are a trader looking for a breakout, then this would be pretty interesting. So the market breaks out towards the lower side, inducing you to go for a short selling trade. Then immediately after you go for your short selling trade here, then the market changes direction and starts moving upwards. So that would be described as a fake out. I wouldn't say it's the perfect fake out, but that's how normally a fake out will look like. So if you're trying to avoid a fake out, it's kind of a very difficult task. So the idea is that if you ever get caught in a fake out, you exit early with a small loss. But then, in order to try and refine your entries and exits, sometimes it's better to wait for a confirmation. So after the candlestick has broken the trend line and shown you that the price is moving downwards. For instance, in the 1 hour candlestick, you can see this is the breakout, but the next candlestick was not a confirmation because there was a rejection and the market moved higher. So in this case, if you waited for a confirmation, you couldn't have been trapped in the fake out to go for a short selling position. So that's it for the day. Thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So there's last question here from Brian. Is the FOMC expected to be dovish or hawkish? Naturally, because inflation came in stronger than expected at 3.2%, and at the same time, we know that the interest rates are really high in the US. There could be a chance that the Jerome Powell will try talking out of his way and basically saying, let's hold higher for longer, and that should be bullish for the dollar. But then, based on what we are seeing in the markets today, and this is the dollar index being really strong against other currencies, and last week also some form of recovery, then this means that the markets could be pricing in that potential that rates have to stay higher for longer. And as a result, we could be seeing the exact opposite reaction. So when you see the markets moving like this, especially on the 4-hour chart, and the news hasn't happened yet, then the likelihood is that the market will take the opposite direction in the reaction. But then, as I always say, it's much wiser to wait for the FOMC announcement, to wait for the press conference before you can execute your trade. So in that case, you'll be trading from an informed perspective. So thank you very much, guys. And bonus point, know that the Nvidia week is here. This is the week where there's the developer conference. It started yesterday, and they happened to launch a new super chip. So Nvidia's annual developer conference started on Monday. It's a 4-day meeting with the chief executive Jensen Huang introducing the company's latest chip, the B200 Blackwell. He also detailed a new set of software tools to help developers sell AI models more easily to companies that use technology from Nvidia, whose customers include most of the world's biggest technology firms. So the B200 Blackwell microchip from Nvidia is 30 times speedier than its predecessor at some tasks, and this was reported by the Nvidia CEO yesterday. So we could be seeing much activity on that stock today, so be on the lookout. Thank you, guys. See you then.